And now we want to be looking at the sales tax system. Now, I'm going to be thinking about the sales tax kind of in alignment with the vendors, even though taxes are messy. They kind of mess things up. We can think of this as a kind of consumption tax. So if you're not in the United States, you might have this is a similar type of tax that you have in many other parts like Europe, for example, as opposed to having a main tax like we have in the United States as our income tax. In other words, I'm looking at this from this perspective of the United States because that's where I'm located, but there's no real new tax under the sun in essence. It's just a matter of which tax is being applied in any kind of particular location. In the United States, we have a sales tax for the main federal tax that we have to deal with, and then the states might tax however they want. They might choose to also have a sales tax, income tax that mirrors the Fed, or they can have a tax that would be like a consumption tax, which we call a sales tax. So that's what we'll look at here. If I go over to my little flowchart, which again is the desktop flowchart, but I'm just looking at it because any accounting system will have this kind of flow and the forms will be named in essence the same. You will note that they have the sales tax manager up here in like the vendors area. So if we're talking about a sales tax or consumption tax, let's just kind of mull over why that is and how basically this tax will work. Noting also that when we think about the accounting system, it will be the same. It's universal. It's kind of like math when we think about the double entry accounting system in general. It's laws and regulations that change from location to location. The one that has the biggest impact typically on bookkeeping is tax law, because of course that has a direct impact on the financials. And so therefore, the taxes are the things that will majorly differ from location to location that we have to keep an eye on when learning accounting and also when thinking about where we want to specialize. So that's another area where we can say, what kind of clients do we want to pick up? And we might ask ourselves, what kind of regulations do they have to deal with? Do they have to deal with different sales tax? If you're in the United States, for example, you might be saying, do I want to be picking up clients that are in a location possibly that doesn't have sales tax because it's in a location that doesn't have that? Or do I want to maybe specialize in sales tax where we have more complex sales tax needs and make that my specialty area possibly for people that are making sales on the internet possibly, and therefore having subject or possibly subject to sales tax in multiple different locations, which adds a lot of complication. All right, what's the general idea with the sales tax? Well, the idea is that if it's a consumption tax, the government is giving a tax to the person that is purchasing the items. That's the concept of it. But they're forcing us as the business owner to be the collection of the sales tax. So we're kind of being forced to be the collection agent, kind of like an IRS agent in essence, or whatever, whoever's collecting the sales tax. So that means that on the customer side of things, we're going to have an issue down here when we make the sale. The two forms typically used to make sales, which we'll talk about later, are the invoice and the sales receipt. So when we enter those forms, if we're subject to sales tax, it's going to be more complex because we then could set up the widget within QuickBooks to automatically calculate the sales tax so that we can charge them properly when we record the sale, which will then increase the dollar amount that we're going to charge by the sales tax, which will not be part of revenue, but instead go into a payable account. And that's when the vendor side of things happens, because that means that the accounts payable is going to be going up for sales tax payable. And then that's why it's up here. That's why we have this item in like the purchasing side of things or the vendor side of things, because we think about, in essence, the government as the person we're paying. So you can almost think of it like we're paying the government for what? For like protection money, right? We're paying the government so that they have the police officers, they have the infrastructure that's set up that allows us to basically do our business. And so we're going to be paying the sales tax. That's one way you might think about it in terms of how it relates to what we're doing, or as, in essence, a business expense. But we're kind of not recording it as a business expense really, because instead of recording revenue and then sales tax expense, we're kind of acting as though that might actually be a more proper way to do it, honestly, but we're kind of acting as though we're just a collection agency. When we make the sale, we're recording the sales tax portion to accounts payable or sales tax payable, and then we're going to take it out of sales tax payable and basically pay it at that time, which is why we're basically paying out to what we can think of as kind of like a vendor who's providing us with, protection and infrastructure or whatever. All right, so that's the general layout. Now, if I go into the QuickBooks, then